Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, November the 20th, the year 2018. Let's talk trading at the line. I've been corresponding with a trader I've known for a few years, and I don't know if I should say who it is, but anyway, he was telling me that he I guess he kind of wish he listened to me or something because he quoted me or paraphrased me when I said something to the effect that, there's nothing to learn. When price gets to the line, you enter the trade. Um, because, some people might think that's simplistic or that it's trite or that it doesn't take into account all the complexities of the market. But the bottom line is that you have a system or a method, and that method is going to generate a signal that says buy or sell, and it's going to be at a certain point on the chart, which if you put a horizontal line there, it's basically when price meets the line, you buy or you sell depending on which way price is moving when it hits the line, right? I mean, it really can't be any simpler than that. I mean, that is the essence of trading. Whether or not it's a fib line, just a regular, grid line, an open, a previous high or low, you know, any of the lines, a line at the pivot, it doesn't really matter. Because when you get down to it, when it's time to click the mouse, you're going to wait for price to hit the line, then you're going to enter the trade. Now, of course, that being said, you have to use some money and risk management because, see, trading isn't about certainties because we don't know everything that's going on in the market at any particular time. We don't know how many buyers there are, how many sellers, how many traders are waiting to buy. We don't know any of that. We can use different indicators, MACD, stochastics, RSI, ROC, AT, what ADV. I mean, there's, hundreds of indicators you can select from. But once again, when price meets a line or when a value meets a certain other value, which can be expressed on a chart as a line, when price gets to this point, this line, then this is what you do. There's no more thinking. It's just acting. As that one post I had, traders are basically trained monkeys. And sometimes we get the banana and sometimes we don't when we enter a trade. it's, I mean, really, you have to be a trained monkey. In other words, when you're trading, no more thought, just react. You see it, you do it. Pavlov's dogs. You hear the bell, you salivate. I mean, that's really the essence. So, for example, here on the monthly, I remember yesterday we were above the midpoint, the current midpoint. So, when price dropped and it hit that current midpoint, it was probably on a red candle and had to be on a red candle, right? At least on the 1 minute chart, possibly, right? Point is, it was going down. And so, had you taken that trade, you'd be up what? About 50, 60 pips, I believe, right now. Simple trade at the line. Now, don't know if it's going to work every time, but that's why, once again, you have money and risk management. See, there's really nothing to learn. Price hits a line, you trade. There is nothing to learn. It's just do. So here we go again. We have a huge wick zone because we pretty much had a doji on the week last week, but price doesn't like staying in the wick zone. We know that, and we know the weekly open. We know price likes to cross the weekly open, and right now we're 43 pips below that weekly open. And just like we've got some gaps still open. Now, this is a holiday week, so who knows what's going to happen, whether or not these gaps are going to fill on a holiday week. So we've got this price at the line. And that's what happened there at those lines, the weekly wick zone. On the daily, we entered the upper wick zone. We came back down. We went through, entered the lower. We came back down. There's the previous day's low. We pushed through it. What do? Red candle hits the line, you go short. There's no more thought. It's just, you just trade at the line. You see here, 1, 2, 3, 4, 5, 6, 7, 8, 9 pairs over 100. Now look at this. The beast is only 88, but the new beast is 158. That's why it's the new beast. But, you can pretty much take all those trading books and all those seminars. You can pretty much toss them to the side, set them aside, because when you get down to it, there's going to be some kind of line on a chart, and you're going to have to trade when it hits the line. And it doesn't matter how this line is generated. This is just previous day's low. And we look at the hourly. We've got the buy zone. And there's something else to keep in mind when you're trading. You're either trading away or you're trading towards. So what do I mean by that? Well, with the buy zone, you're trading away from the daily open. So when price comes and hits this line and you go short, okay, then it comes up here, it didn't quite get stopped out, and it comes here and it comes short again. You can see it and it starts pulling back. You might want to scratch the trade. It's just not doing anything. Or you could have stayed in it. If you did, and you put your stop just above the daily open, you would have been stopped out. And if you put the stop here above the buy zone, you've been stopped out. But let's say you put it above it, so you were still okay. And then you came here, and it didn't barely push through again. If you didn't scratch that trade, then you're not paying attention. And then here we go. We got a buy trigger here. Just like if you took this buy trigger, you would have stopped out, most likely. Take this buy trigger here. Once again, it's telling you, it's not really moving your way, so it comes here. Let's just scratch that trade. And here on the short, on the other hand, boom, right through the short zone, right through the weekly open. And you can see there was a nice trade. And the pivot point was sitting right in the short zone. So if you were trading that, the pivot trade, you would have been short right here. You see, you would have made your pips on that short trade, and you should be out if that's what you're doing, the pivot trade. And the rat zone, once again, we draw these dots or lines, and we know that we should be short when it's in here. We should get long when it's in here. And once again, you see here it paid off, and now it's back here. So Larry live trade. Let this candle close. See what happens. We go long at the 20. And once again on the pivot, we see that we hit the pivot. We took out the weekly pivot. Okay. And on the daily, we're sitting right here at S2. Took out the pivot. We still have 2 missed pivots. And we're moving further away from those pivots. Price action. And this is one of the simplest screens here. I mean, if you're a beginning trader or struggling trader, you can't get much simpler than this. Now, I'll show you the indicators. The ones that really matter are the semaphore that I modified. You could use the original because we don't really have anything on here except the bias. So if you want to use the modified, it'll tell you which way you should be trading. And then the other one would be the sweet spots gold that I modified. And so you can have the price boxes there. Those are two main indicators. And once again, the bias is long, so we're looking to go green at the line. So in this case right here, we went green at the line and it didn't work out. But that's just trading. Sometimes it doesn't work out. And since these bars are happening, this big here, that's a pro trade, especially if it's a one ball. If you're a beginning trader struggling and you see the one ball and it turns, it comes here to the line, chances are you really shouldn't be taking that trade because you could get cut up. So, but professional traders, experienced traders would see we're cutting through the double O, and they might take it, thinking it might go down to a different level here. But that, you'll see these things when you get seat time, meaning staring at the chart, time staring at the chart. Once again, just lines. We're just going to trade in a directional line. No thought involved. Once again, what could be simpler? Just use your money management, as we saw before, wick zone. Price doesn't like staying in the wick zone, in and out. I say it every day, but you can see it. It came in and it came out. And remember these big candlesticks, price has a tendency to like to go back to the open. So you see this open right here? I'll go out on a limb, 128.93. Let's just say I've got a good feeling that, trading by feel, trade what you feel, that to get long, I would look for price to return here and price to return here on the shorter term, 128.62. So if you go long, you could set a target there and see what happens. Holo, as you can see, we're getting ready to possibly get another holo trade right here. And the lowest open was put in, and you can see here. Remember, hourly open. So this is 15-minute chart, but this hourly open. Inventory reduction bar, as you can see, there was a nice short trigger there. One there if you were a little late to the game. And there's a nice long trigger. So we've got some short triggers put in here. Long trigger, 128.30. Once again, horizontal lines from the previous day, week, and month. You can see here we had quite a bit of selling at one point, not too long ago. And I'm thinking I could add the time here, maybe elapsed time. I was thinking about that, but I don't want to make this too complex. Maybe I could do time instead of ticks. I don't know. I kind of like the ticks. And as you can see here on the tick chart, where the ask dropped below the peak of the bid and just kept coming down. The Einstein line, you can see there was a trigger there. There's a trigger here. Probably should have scratched. Now we're back in the waiting mode. But you can see once again, it's just price at the line. No thought, doesn't matter. So, at the line, what are you going to do when price is at the line? You enter the trade. Sometimes you'll win, sometimes you'll lose. But always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks.